Now we've heard that things could be looking up for the economy, but what about your own investor confidence, which has been badly shaken for the past year? Will inflation soon rear its ugly head again? The housing market has seen its share of weakness, but it might be just the right time for you to invest in a new home. DiNuzzo joins us now on the Sunday Business Page. He's a certified public accountant and chief investment officer for DiNuzzo Financial Advisors in Beaver, Pennsylvania. And he's here to weigh the pros and cons of certain investments. PJ, welcome back. It's always good to have you on the show.
Good morning, John. Thank you.
Let me ask you about the housing market itself. What are we hearing now?
What we're hearing is we're seeing less bad across the board in the economy and in the housing market, which is real good. We just had some positive data that came out this past week that most of the markets, that the housing prices inched up. I mean, albeit just a little bit this last week, which is good news. So we are seeing a heartbeat coming back, and there's been some improvements. And we think that folks need to be careful because rates have been so low for a while that they maybe don't miss the opportunity to get into lower rates if inflation starts up.
Well, let me ask you about that because, yes, rates for refinancing your home or also for buying a new home have really been very attractive in the 5%, sometimes lower range. Are they still stable or are they moving upwards now?
They've been moving upwards. It's a little bit of a perverse connection in that the better the economy does, that the more that the Federal Reserve is worried about possibly raising rates, which would raise mortgage rates as well. But yeah, they were below 5 for a while, and now across the board they're above 5. We could see one more dip, but the better that the economy does, we may be seeing some bottoms in here for long-term personal mortgages at this time.
So if you're really still thinking about refinancing your home, or even perhaps buying a bigger home, or downsizing for that matter, this is the time to do it?
Yeah, if you take a look, John, historically at the rates, we're at a very low period right now. So you need to be careful trying to get the best deal because you may miss out again. So, you can't really go wrong if you lock in something in the low 5% range for a long-term mortgage on your residence or for the refinancing, as you mentioned.
Right. Now, you mentioned inflation, PJ. Are you concerned that inflation could hit us again?
Yeah, it's a little bit of a double-edged sword. We've gone through what Chairman Bernanke has now described as the worst financial crisis in history. And Chairman Bernanke is a student of the markets, and that's really quite a mouthful. So really, the good part about it is it's been centered in the financial markets. The bad part is that affects all of us in our lives across the board. But we are looking at inflation because the good part is if the market starts to pick back up again and the Fed starts to raise rates with the unprecedented amount of capital they put into the system, no matter how adept or how deftly they are to remove that from the system, it's going to be a major challenge. And we are going to, in all likelihood, next year or two, see some inflationary pressures, which we haven't seen in quite a while.
And when we talk about inflation, from a consumer standpoint, from my standpoint, it's really how much do things cost when I go to the store? And to some extent, with the exception of gasoline lately, which seems to have come down just a little bit, I don't know that I see any real price reductions out there when I'm buying as a consumer.
Yeah, really across the board, and some folks, we would argue because when we go to the grocery store, we've seen some items move up there on the food side, but across the board, there's really been, because of the massive problem that there was in the financial markets, a massive deleveraging, which has caused a lot of deflationary pressures. So it's been unique the last couple of years. We've actually seen some deflation or stagflation, so to speak, across the board, but that is going to run its course here at some point in time.
That means what? That things have basically stayed the same on pricing?
Yeah, the things have stayed the same and or moved down a little bit, but that's going to be over shortly, next 3 or 6 months or within next year or so. And when it does start to tick up, which everyone knows, the question is how fast is that rate of acceleration going to be?
Which means that we could expect goods to cost a whole lot more a year from now?
Yeah, across the board we could see goods. We could expect goods to cost more across the board, and just really everything that inflation, really just the CPI index, just really everything, your basket of goods across the board increasing.
And it comes at a time when our salaries are not going up particularly.
Yes, that's been the challenge.
I mean, how do you pay for things when in many cases people have actually lost money, not just because of the market, but because employers are cutting back? Or you're out of work. I mean, that's another big story.
Yeah, and it's been a real challenge, and even a number of states, as one of your earlier guests was talking about. We have clients across the country, and you talk to clients even in California with the problems they're having there, and with the furlough dates that even if you're continuing to work, if you're just receiving maybe you're down to 85%, 80%, even 75% of your pay, that's a massive challenge for a family of 4.
Right, no doubt about it. Now, is the stimulus bill working?
Really, we really haven't seen a whole lot yet, John. There's only been arguably, depending on which accounting you're looking at, 5 to 10% of the stimulus bill has been appropriated. It's going to be coming in later years, which some of those align with some political elections coming up next year. But really,
never hurts to spend government money.
Yeah, you already expert on that.
During an election year.
Yeah, but it's going to be a challenge in that if you take a look at the last major downturn we had, such as this in the early 80s, the approach from stimulus was a lot different. It was a lot more geared towards small business, reducing taxes, et cetera. So again, different strokes for different folks. There's a different regime in office, and they're running the show. But there has been a lot of money appropriated to. We're just hoping it's spent wisely whenever it comes around.
Yeah. Finally, and very quickly, are you optimistic? Have we turned the corner?
Optimistic, again, facing the largest financial challenge in history. We are optimistic that we are in a bottoming process. Earnings are coming back in with corporations, albeit there's been a lot of cost cutting to get there. But we are looking forward. We do think we're bottoming out. We're looking to be up potentially 10% by this time next year.
10% up? We'll take that.
We'll take that.
PJ DiNuzzo, thank you, sir, very
Thank
much
you,
for
John.
coming in. We appreciate it.